Hey traders, how's it going? Nick from Vant Trading here, coming at you with an educational video that was supposed to be posted yesterday, but I'm going to be posting it today because I actually kind of went on a tangent with this one. This one's going to be a very interesting one. If you are at all interested in trading IPOs, you're a technical trader, you're a swing trader, day trader, it doesn't matter. I've got a pretty interesting lesson plan, I think, here because over the last, it's been 10, 15 years now trading professionally, I've really honed in on trading IPOs and trading the follow-ups of those IPOs when they run, because sometimes you get some incredible opportunities. And originally it was just going to be about the Robinhood IPO. That is what I'm going to be starting with, but I'm also going to be covering a very important topic in terms of IPOs, which is the best trading in IPOs in the market honestly doesn't usually come from the day it IPOs. Now, there is very good opportunity, and I love trading IPOs when they first release, but a lot of times the best opportunities in trading comes from the following days, weeks, and months. I'm going to show you what I mean. I've got about a dozen or so examples, some of the biggest IPOs that have ever come out on the market, and we're going to show you exactly what I'm talking about. But first of all, we're going to talk about Robinhood. And I'm going to try to keep this video brief, succinct, and informative. It's more educational, entertaining, informative. I'm not telling you how to trade or what to trade, but if it's at all any of those things, be sure to drop a like, subscribe, comment for if you have any questions, comments, concerns you want me to talk about another topic next week, just drop it below. All right, let's dive on in. Let's talk about the Robinhood IPO because we had a pretty lackluster couple of days after that IPO. I've got a 5-minute chart here. We're going to just take a look at those first 2 days. Very lackluster as far as it would go. As much as the CNBC pundits and the people on Twitter and so on hyped this IPO, it was pretty lackluster. But trading opportunity came in the following days. One of the most important levels for an IPO, even months or years after it has released, is that opening price, where it opened up at when it IPO'd. Robinhood was at 38. So that's where it opened up in the secondary market. It's an important thing to keep in mind because a lot of times, in Robinhood's case, a lot of people were banking on this one to fail. Retail traders and all sorts of people were saying this is going to fail. People hate Robinhood right now because of all the GME stuff. It's going to fail. Short it, short it, short it. And you got to remember, the market is here to inflict the most pain. And the greatest opportunity came in Robinhood 3-4 days later when we returned to this 38, that opening price that we could not get above since we opened on the IPO market, on the secondary market. And that day, 2 days after, we ended up wedging up into that 38 and we finished strong, a good sign. The next day, we opened up right at that 38, right at that important level. We did a little battle there for 10 minutes and then off to the races. This is when the opportunity for Robinhood presented itself, and this is when we saw it go from 40 to 85. It was those following days, and I'm not going to tell you how I traded these days or how you should trade these days, but when the most movement came was the following days after that capitulation happened. Once we started violating those levels, and all those people who got in short got squeezed out. So sometimes you don't need to just be in on that first day, and you don't need to look at the first 2 days of trading on Robinhood and be, this stock sucks, I'm going to move on. Set alerts. Keep tabs on these recent IPOs because you never know when something like this will happen and it'll perk up. And you had plenty of opportunity to trade in this day, even if you're a patient trader. Flag break, flag break, flag break. It finished strong, which typically leads to an update or a gap up. We have videos on that, and that led to obviously a supernova day, and then we've since obviously come back down as we should have. But the best trading came days after. Now I'm going to go to a daily here. We're just going to look at a couple examples. Another example is another one that came out recently, Traeger. Traeger came out around the same time as Robinhood, spent the first 2 days doing almost the exact same thing. In this case, it actually held the opening print, that 22, but it didn't do anything for the first 2 days. And then look what happened on day 3. We got a little bit of action. We finished strong, and that became kind of an igniting time for Traeger to run from 22 to 33. Smaller example, more of a swinger, but this is one that we talked about every single day on our show. Was another great example of a stock that woke up. Let's show you a couple others. This is one more recent one that we're going to go into some more bigger ones. IMRX is an immunotherapy, did 3 days of nothing, and then it finally got through that opening price, that opening print of the IPO, that 1950, and off to the races it went. Now, again, some of these thinner, more loosely traded. Let's look at some bigger companies. PWSC, Power School Holdings, another recent one. This is one that I did talk about when we were doing prep for the IPOs. This one spent a couple days and then it took off going from 18 to 27. Again, smaller examples. Now let's get into the big boys. But before I do this, I want to tell you, this isn't some guarantee, all right? This isn't that, oh, the IPO took, didn't do anything for a couple days and then took off. That's when you buy. No, they sometimes don't work. Look at Duolingo recently. Had its IPO print, actually got up above, did a little bit of a squeeze here, but it's dropping off. And actually, you've got a pretty good, what looks to be a pretty good short opportunity now as people lock in profits on this one. But let's take a look at the big ones that I had alluded to. Let's look at Facebook on its IPO initial time. This is Facebook's IPO. What an abysmal IPO. What an abysmal first impression of the market. Spent that whole year just in the dumps, not doing anything. And it wasn't until later, if I draw, and I'm not saying you had to wait until it came back to its IPO price, but it eventually based, got itself up, got going, and you all should know the rest. Facebook just kept going. So it really didn't get any life until it really got up over there, got a couple earnings, and got some more interest. Let's look at some more. Alibaba. A lot of people loved Alibaba on the IPO day. Looked like a fun little day, from $90 to $99 to $100. Nice bit of chunk of change in there. And then it spent the next month or so doing nothing. And eventually Alibaba woke up. And it woke up, it got back through that IPO print, and it eventually started getting volume, had some earnings, and off to the races it went. It dropped back down again, spent some time down there, and then actually, several years later, you saw it get back above that price and off it went. So having that IPO price can really help you. Setting alerts on there, double checking on these stocks from time to time. A year later, almost, that IPO price became resistance on Alibaba, and then it became support. It's a cycle, and the market remembers these levels. Let's look at another one, Gopro. A lot of people may not know that Gopro took off like a lunatic when it IPO'd. It had actually a nice couple of days of the IPO day. Yes, there was opportunity to be made in here. Then it spent about a month or two doing absolutely nothing. And when it woke back up again, oh my goodness, it went from 50 to 100 in a matter of a month. I mean, absolute supernova on this one. And it obviously has never recovered since then. We're trading at a low price. But even if you missed this first week, don't give up on these stocks. The real alpha came when that volume started to pick back up and when it started to violate levels, when people's eyes went off the stock. Shake Shack, another one, spent several days depressed after that IPO. Couldn't get above. You had this IPO opening price. Look, we eventually got above it. It held, spent a couple times up here, and then off we went. Shake Shack went from 46 to 100 almost, kind of like GoPro, just suddenly took off. And look, we've had all sorts of movement in that one since then. And now let's take a look at another one, Synchrony Financial. This is one that a lot of people didn't trade initially as well, but look at the first couple IPO days. That's pathetic. And then look what happened 2 weeks later. We got above and off we went. You had a nice 2 days of trading on here. We got above, we held, spent a couple time, volume came in, we pushed, and then it spent a couple more months, got through the resistance, and off we went again. And now this one's all sorts of in play. And look what happened years later. Synchrony Financial, over 4 years later, came back down to the IPO price, and it almost held perfectly. I mean, that's not bad. That's actually pretty impressive. Came down to the whole number, actually, and held around the whole number, but still came back into play years later. Let's look at another one, Uber. Uber's a more recent IPO. Spent several times in the dumps, and this is another good example of one that, look, picked up, looked like it was going to show some life here. Oh, we're marching higher, got knocked back down, but keeping this IPO price, that opening print on your screen and keeping that level drawn, it became resistance again a year later. And going into today's trading, it actually proved to be a moment of support, and we're seeing some buying step in, and now it's failing off of that. So those initial trading days, the market does have a memory of that. Let's look at two more. First of all, Twitter. Twitter, when it IPO'd, zoom over here, spent a couple weeks yet again just in the dumps, and then lo and behold, we got ourselves back up above that IPO price. We went from 46 up to 75. That's a pretty nice little move right here, I have to say. And you saw the volume increase, you saw interest become, get back into this stock, but it spent several weeks down. If you just would have tuned Twitter out a week or two just because it wasn't doing anything, didn't set alerts, now look where you'd be. You would have missed out on such a fantastic move and opportunity. One more I want to show, in that Snapchat. And the reason I want to show this one is because this one actually was dead for a while. Snapchat, your IPO price of 24. Had a little bit of life actually on its IPO price, had spent almost the entire time since then below the IPO price. It wasn't since the last year, 2020, when we got back above. We finally got back above that initial IPO price since we pretty much initially started trading in the secondary market, and now obviously pandemic kind of helped fuel that a little bit, but a great example there. And this is just several examples where I'm not going to get in there and try to show you the intraday of every single opportunity and how I could trade it. That would take forever. But Robinhood, just as an example, provided an insane amount of trading opportunities in these 2 days following almost a week after it IPO'd, just because we were patient. We waited for that violation to come. And the reason, the catalyst of us getting through that level could be anything. It could be a news event. It could just be retail interest. It could be people looking away and getting squeezed out. In this case, it was everyone was betting on Robinhood to fail. What is the market's job? To inflict pain. And in a result here, it inflicted pain. And you need to be a contrarian by nature as a trader, and that's going to save you a lot of times. It's going to save you some pain, because if the whole market wants Robinhood to go down, it's probably not going to go down. And so lo and behold, you got a nice little squeeze here. You got plenty of trading opportunity. And that just goes to show you that just because an IPO doesn't work the initial day, just because the first couple days or weeks or months are just not interesting, if it's a stock that is big or important, Snapchat, Twitter, Facebook, Uber, whatever, set alerts at that price. Check back in on them from time to time. That way, a month or two down the road, it happens to get back above, it might be worth getting an alert. It'll take you all of 5 seconds to set that alert, and about 5 more seconds to check on the stock when that alert triggers. And from there, you just do what you do, and you make money in the market. So I hope that this was helpful and informative. I know it was kind of a broader topic, and I was really trying to scrape the bottom of the barrel here to really kind of create something that was hopefully interesting and engaging, and something you never really thought about. But I thought it was a good lesson about patience in the market, setting alerts, and how really FOMO in that first day of trading can really be avoided. You don't need to trade the IPO day. There's opportunity all the time in the market. You need to find the setup that works for you. And maybe it's in IPOs, maybe it's in something else, but this lesson can be applied to almost anything. So I appreciate you all for tuning in. This was Nick from Vant Trading, and as always, safe trading.